we're going to switch to a commodity that has been doing very well, especially in a space where not many have. Uranium. The world has starting to wake up to the fact that, oh my goodness, yes, uranium's not so bad. In fact, it's quite good if we actually care about carbon and we still want electricity. Go figure, Stephen. Go figure, eh? Wonderful. I always got to get those Germans to wake up and stop being hypocritical as well. This is going to be a fun one. I'm really excited about this. I want to learn more myself about this. This is the DASA project. It's in the heart of Niger's uranium district. Stephen Roman is a very well-respected, very well-known company builder here in Canada. He is the founder, chairman, and president of Global Atomic Corporation. He was previously president and CEO of Heart Gold, got a gold mine up and running. He successfully identified, financed, and developed and brought into commercial production many mining and oil and gas projects in the last 40 years. And notably, he was the founder and co-chairman and director of Gold Eagle Mines, which was acquired by Goldcorp for a mere $1.5 billion. Not bad, Stephen. Stephen, it's been too long. I haven't seen you since before COVID. Really nice to see your face. How are you keeping?
Thank you very much, Anthony. Yeah, it's great to be here. Thanks for inviting me to speak this morning. And yeah, COVID had us locked down for a long time for sure. But we've continued to operate and run. And I'm just wondering if I can share my screen. Laura, do you have my PowerPoint by any chance that you're going to pop up here?
I'll share it for you and you can just let me know when to switch slides.
Okay, so we're going to speak today about Global Atomic Corporation, of course, a company I started in 2005. And what we did, basically on my past history with Denison Mines, I decided to explore in a different area. So I went to West Africa and Niger. I was quite familiar with the region. They were opening up the door for new foreign investment. And we got in there early and started going through old historical records and picked up 6 great concessions. And we can flip to the next slide. I think is just the forward-looking statements, and the next one. So we're a little different than other exploration companies in that we actually have a producing asset in the company. It's another company I started in 2005 that's producing zinc currently in Turkey, a place called Iskenderion right on the Mediterranean. And what we did is back in 2017, we merged Global with Silvermet to form Global Atomic Corporation, because after Fukushima, of course, the whole market for uranium dried up and there was a 10-year drought. We decided to combine our public company with our private company, give everybody liquidity, and of course, use the cash flow from that to further advance our uranium exploration in Niger. So we're a profitable company on the zinc side and hope to be soon also on the uranium side. So we can go to the next slide. We're located in a place called Niger in West Africa in the Tim-Mersoi Basin. So the Tim-Mersoi Basin is similar to our Athabasca Basin in Canada. It's a sedimentary basin. The uranium deposits are hosted in sandstones. And this has been an area that's produced uranium for the last 50 years. France was getting 30% of their supply from here. It's a well-developed region, very secure. It's a strategic area for the government of Niger, and they protect this very, very strongly. So we're located between 2 major centers, Agadez and Arlit. And there's a power line going right through our property. There's a coal-fired power plant there where you see that little yellow lightning bolt. And our DASA project is right there on the main highway called the Highway of Uranium. And of course, the big production was coming out of Arlit, and that's operated by the big French group Orano Mining, formerly called Areva. GoviX, of course, has just announced their feasibility. They have Madaouela right south of Arlit. And then, of course, is our DASA and Isakanen, another project we have. And then just to the west is the big Orano Imuraran. Then the Chinese CNNC have a plant in Azalik. It's no longer running. They ran out of ore. They're back exploring. And then we have a bunch of concessions and a deposit called Tinigaran, just southwest of Agadez. So the area is prolific. It's produced uranium for many, many decades, and all the infrastructure's there. The great thing for us is that the Cominac mine actually shut down after 50 years of operating last year. So now that their entire workforce is available for us. And we've really advanced our project to the point now we're in the construction phase to put it into production. So we just, because we don't have a lot of time, I'll flip quickly through this. Next slide, Laura. So this is a 250 million pound deposit. We discovered it in 2010 through our surface prospecting efforts. And what we've done is we've now broken it into phases. So we've done a feasibility study on the area in the red box called phase 1. And we call this the flank zone area. And so that's going to be a ramp access underground mine, similar to what was being done up at Cominac. And then after 12 years of mining in that area, we move into phase 2, which is the bulk of the deposit. And then eventually we could mine the surface lower grade mineralization with an open pit. So it's a large high grade deposit, and phase 1 represents about 20% of our overall resource. We go to the next one. So this shows you the deposit in measured, indicated, and inferred. So our feasibility study focused on that big blue area there towards the top. That's the flank zone. It pulled a couple of other smaller areas in that made the cut as far as drill spacing. And so what we've done, we've just finished a 16,000 meter drill program, and we've been infilling, moving the inferred to M&I in the center part of the deposit, and also in the, you can see the left-hand portion of the deposit where you've got the large yellow areas of inferred. So this is now, if you go to the next slide, show us what we've got currently. And so that inferred now has been bumped up to the M&I, and we'll be able to pull that into an entirely new mineral resource estimate and mine plan. That's going to be done, of course, over the next few months, but we are working on currently the feasibility study we did on the flank zone. So that's not going to change our first 12 years of mining, but it will have a big impact on the mine going forward. So we've actually had a very good success with our drilling at moving all that inferred into M&I, which will form part of the overall resource. Going further to the right on that page, you see the blue and the yellow. Those are outlying areas on strike. So this deposit's about 2 kilometers long. Next slide. This gives you an indication of our cutoff grades and what the deposit looks like on the grade tonnage report. So for our feasibility study, because uranium prices were still very low, we used a price of $35 a pound for our feasibility. And to make the project economic at that kind of a price for uranium, we used just over a 2,000 ppm cutoff grade. So that gave us, you can see there, over 110 million pounds, grading at about 0.75%. So this deposit really is an anomaly in Africa. Most African projects are running around, let's say, 300 to 800 ppm. Some of them get up over 1,000 ppm, maybe 1,400, 1,500, but nothing is showing grades like the Dasa deposit. You can see even at a 10,000 ppm cutoff, we have about a 2% ore body here with over 50 million pounds. That's definitely something that is very robust, and really we can tailor the project to suit the economic conditions. Next slide. This is a snapshot of our feasibility numbers. So we'd be mining at over 0.5% for the first 12 years, kicking out about 45 million pounds. The CapEx, 208 million, all in sustaining costs at 2193. That gives you an after-tax NPV of 157 million and an IRR of 22.7. Now that's at $35. And of course, everyone should remember, this is only the phase 1 area. This is not the entire deposit. And if we go to the next slide, you'll see what's actually happening today with our sensitivities here. So we've already signed up one utility for a long-term agreement with deliveries starting in 2025. The price is north of $50 a pound. So you can see at $50 a pound what happens to our NPVs and IRRs. And of course, people think that prices are going to continue to move higher as more reactors are put online. And there's really not a lot of excess uranium out there, even if all production starts again that's been shut down. So this is a project that's a standout project. I think it's the largest, highest grade uranium deposit on the African continent, currently under development. And we're very excited about moving this to production. Next slide. This is a production profile starting a little bit at the end of 2024, and then flank zone area you can see there in the dark blue. And of course, then continuing onwards with phase 2. After that, for many, many decades of production, I estimate will be similar to the Uranium mines at probably in the 50-year range. Now we've targeted a production profile of 1,000 tons per day of ore coming up from the mine, which will produce about 4.5 million pounds. So we felt that was a good place to enter the market. We have to be able to sell this material, of course. It's not like gold. And we think that that's not too small and not too big, and it's sort of a sweet spot for a new producer to come into the market. Next slide. This, of course, is all on our website. I won't go through it all, but in 2017, we did sign an MOU with Orano Mining to direct ship ore from DASA up to their Somare operation. That's in the works right now to finalize that agreement. We also did our merger with Silvermet to form Global Atomic, and of course, capitalize on the cash flow kicked out from Silvermet from our zinc operation to finance a lot of our work. We got all of our permitting in 2021. And if you go to the next slide, this shows you what we've done in 2022. A lot of work has been done. We've now completed our box cut, put in all the surface infrastructure. We're building a 150-man camp there right now. We've got 75 people working at site. That's going to ramp up to about 150 by November. We signed our initial offtake agreement. We've got bank financing now in the due diligence phase. So the banking syndicate has been put together for a project financing. And we are moving the project forward with ramping starting in November, and eventually some sales potential to Orano on direct shipping. Commission the plant end of 2024 and begin shipping yellow cake to utilities by 2025. Am I over my time, Anthony?
Yeah, we're getting there. I want to save some time for questions. So maybe, Stephen, if you wouldn't mind wrapping up in the next minute or so, then we can.
Okay, just flip through, Laura, if you can, to maybe the last couple of slides here. Carry on. That's some of the building and a little bit of the equipment there. Show you a shot of our zinc plant. That's a brand new plant we built in 2019. Knocked the old one down, built a new one. Cash flow profile on the zinc operation. Next slide. And a little on uranium there. And the next one, please. that just shows you there our market capitalization end of August, 730 million share price. It's down a little bit now, but we figure it's going to be moving back up as we complete more of our milestones. We've got quite a few institutional shareholders that have come on board, and a solid board of directors, solid management team on the next slide. And I'd say a very compelling story in the uranium space. So that's sort of the end of it. Thank you very much, everyone. And yeah, please ask questions.
Yeah, we have some good ones coming in here, Stephen. Really strong presentation there. Great to see how much you're developing this. First one, we'll go to our friend and frequent delegate, Terry Olston. He says, congrats for all the progress and the contractors you've chosen to build the project. His question is, based on the last few corporate and asset transactions, what pricing and valuation parameters would you assign for uranium in situ per pound, especially for assets at your point in the development cycle?
Well, that's a good question. You see if you compare us with some of the other uranium guys in Canada, like NextGen and Fission, that are trading at anywhere from $6 to $8 a pound in the ground, I think we're still trading, even with a full feasibility, all our permitting and going into production, we're trading at about $2 or $3 a pound in the ground. So I think there's a big upside given a 250 million pound deposit. And I think as we complete further milestones, put our project financing in place, you will see the price continue to move higher as all of this work is reflected and we get value for the pounds we have. In the company in total right now, we have about 300 million pounds. That includes the Issacannon project. We're doing in situ leach testing on that one, but we're very undervalued given the market with other uranium producer or uranium companies. Sorry.
Okay, excellent. Thank you for that. Another one here around China. I mean, you're in West Africa. We know the Chinese Belt and Road Initiative looking to lock up a lot of African assets. Can you give us a little bit of the situation? How active is China in Nigeria with uranium? And what is the government's disposition towards Chinese involvement versus North American companies such as yourself?
I think the Chinese, definitely the CNNC are there with their ASLIC project. CGN, China Guangdong, are also in the country. They're looking for uranium. Clearly, this asset has been on their radar. We've had numbers of discussions over the last number of years with them. We've stuck to our knitting and we want to build the project and become a new producer. Orano, of course, is also in the country. There's others, the Indians, the Russians. Niger is a good location. There's been a big oil discovery. They're now producing oil there. The Chinese have built a big refinery there. The Americans have a big presence there with a big military base. So do the French. So it's a booming place at the moment, I would say. A lot of activity there, and it's a great place to develop a new mine.
Okay, this leads into the next question. We have one from Chris here on assessing risk. The only thing I'll push down a little bit more on, he's asking for a bit of a comparison within the region. So relative to, say, Burkina Faso, I mean, we know Mali has been a mining region with some issues. Relative to some of its neighbors there, can you give us kind of a relative risk analysis on Niger?
Yes, the risk profile, I would say, is very good with the presence of the North American and European military there. The Niger forces have all been modernized and ramped up. The country is completely aligned with the West. They would like to keep the riffraff out of the country. And there have been some skirmishes along the borders with Burkina and Mali, some along the Nigeria border. But where we are, we're 1,000 miles away from the borders. It's very secure. This is a very strategic location for the government. It's a big generator of their GDP. So we've not had any issues. I've been in the country for 17 years now, And we've never had an issue there. So I would say security is very good.
Excellent. All right, we're actually a lot over, but it's so nice to have you here, and there's so much knowledge. I'm actually going to sneak one more in here, actually, because it's more of a technical one. We've covered the macro and the risk. This is from Sandeep. Sandeep says, "Hi, Stephen. Excellent presentation. He wants to know about the control of mineralization, and is ISL, as in situ leach possible?"
On the Dasa deposit, no, it's a down faulted graben. It's fault controlled. So it doesn't have an impervious layer below and above, which you need for in situ leaching. Our Issacannon project does have that geology. It's a flat-lying sedimentary bed. It's got an impervious basement and cap. So that's why we're testing it for in situ. There's never been in situ leaching in Niger. So it's sort of a new concept for them. But Dasa, no, it would be conventional, either underground or open pit.
Okay. Well, Stephen, whether it's building uranium projects in West Africa or building gold mines in Canada, you're a fountain of knowledge. We'd love to have you back on the Global Mining Symposium. We appreciate you being here and taking the time. Thank you so much.
Anthony, thank you very much. Laura, thanks for moving those slides for me, and great to be here. Thank you very much to everybody.
Continued success, Stephen. You take care.
Bye-bye.
Bye-bye.